Hello friends, welcome to my channel. This is CA Rakhi Agarwal. Today's topic is related impairment of asset, that is Ind AS, Indian Accounting Standard 36 Part 2. I discussed this standard in Part 1 where I discussed the objective of this standard, the scope of this standard, what do you mean by impairment loss, what do you mean by recoverable amount, how we will calculate the recoverable amount, how we will recognize the impairment loss, what are the measurement criteria. Then we had discussed about value in use in foreign currency, how we will determine. We will discuss about the external and internal indicators of impairment. Then we will discuss about the three assets on which without indication we will do the impairment testing every year. That three assets, that is goodwill, which acquired at business combination, and also intangible asset who has an indefinite useful life, and intangible asset not yet available for use. In these three assets, the impairment testing is done. Even there is no indication, then also we will do the impairment testing every year. And in other asset impairment, if there is an indication, then only impairment testing is required. Now, how we will calculate the impairment loss? When the recoverable amount is less than carrying amount, then impairment loss is there. And if recoverable amount is more than carrying amount, then no impairment loss. And how we will find out the recoverable amount? We will find out fair value less cost to sell, and then we will find out value in use, and whichever is higher, we will consider that as a recoverable amount. Means higher of fair value less to cost to sell or value in use, we will consider that as a recoverable amount. Then we will compare that recoverable amount with the carrying amount. If the recoverable amount is less than the carrying amount, then there is an impairment loss. Fair value, how we will calculate the fair value, and what are the items there to find out the fair value. Cost to we will calculate how we will find out the value in use. So this we had yet studied. Now we will continue our topic with further more discussion. So let's start. Now we will discuss the impairment loss key point. Firstly, impairment loss should be recognized immediately in profit or loss unless the asset is carried at a revalued amount. Impairment loss of revalued asset should be treated as a decrease in revaluation. In case of revaluation, if there is an impairment, then that loss is to be treated as a decrease in revaluation. And if there is other than revaluation, if there is impairment, then it should be charged directly to the P&L. And in case of revaluation, the revalued amount is to be decreased, which we had discussed already in Ind AS 16 also, Ind AS 40 also. If there is a revaluation of asset, then and previously there is a revaluation, and after that there is an impairment of that asset, then we will decrease that loss, impairment loss, with the revalued amount. But if there is no revaluation, we will directly charge that loss to the profit and loss account. Now adjust the future depreciation based on revised carrying amount less residual value. Now after revaluation and after impairment, there is a revised carrying value. Now we will charge depreciation on the revised carrying value. Like for example, the value of the asset before impairment is 100 and the impairment loss is 20. Then the revised carrying value will be 80. Now the depreciation is to be charged prospectively on the revised carrying amount. Means for the future period, whatever the depreciation is to be charged on the revised carrying, not on the previous carrying value. So after impairment, if there is a revised carrying amount, the depreciation is to be charged on the revised carrying value. Deferred tax asset or deferred tax liability are determined in accordance with Ind AS 12 by comparing the revised carrying amount of the asset with its tax base. So in this case also, we will explain with the help of example if there is a deferred tax asset and liability which will be determined in accordance with Ind AS 12 by comparing the revised carrying amount of the asset with its tax base. Now this is to be explained via example. Deferred tax, how we will do the impairment loss in case of deferred tax. Mercury Limited has an identifiable asset with a carrying amount of rupees 1000. It has an identifiable asset whose carrying amount is 1000. Its recoverable amount is rupees 650. The tax rate is 30% and the tax base of the asset is rupees 800. Tax base is given, carrying amount of the asset is given, recoverable amount of asset is given, tax rate is given 30%. Impairment loss are not deductible for tax purpose. What would be the impact of impairment loss on related deferred tax asset liability against the revised carrying amount of the asset? Now we will solve the solution. First we will find out the carrying amount. The carrying amount of the asset, as we know, before impairment loss is 1000 and the impairment loss, the recoverable amount is 650. So the impairment loss is the difference between the carrying amount and recoverable amount, that is 350 is the impairment loss. Now after impairment loss, the identify value of carrying amount of the identifiable asset is 650. That is 1000 minus 350, it becomes 650. Now tax base is, the tax base of the asset is, before impairment it was 800 and after impairment also it was 800, because impairment loss are not deductible for tax purpose. Impairment loss is also only recognized in the books of accounts but not in the tax base. So the after impairment the value tax base will be 800. Now the difference between what was the taxable temporary difference, that is before impairment it was 200, after impairment the difference is 150. Now whatever the temporary difference, we will charge 30% on that. So on 200 the 30% will be 60. On impairment loss we will charge, that is 30% is 105 and 150, that is after impairment we will calculate the deferred tax is 45. So what we will do, previously we had done the liability. We will create the liability because the tax base is less than the carrying amount. Tax base is less than the carrying amount. Then we have to create a liability in order to balance the books and tax base. We will calculate deferred tax liability. But after impairment, there is a tax base is more than the carrying amount. In that case, we will create a reversal of tax deferred tax liability, which means we will make a creation of deferred tax asset. Before impairment, we had created a deferred tax liability. After impairment, the tax base is more than carrying amount. So in order to reverse that liability, we will create a deferred tax asset. Accounting, what accounting entry we will pass, that is deferred tax expense. Before impairment we will make an accounting entry, that is deferred tax expense account debit 60 to deferred tax liability. Why it becomes a liability? Because if the tax base is less than the carrying amount, then we have to create a liability, deferred tax liability. If the tax base is less than the carrying amount, then we will create a liability, and if the tax base is more than carrying amount, then we will create a deferred tax asset. And after impairment, we will reverse the liability because there is a deferred tax asset, means the reversal of deferred tax liability. So we will reverse that by passing an entry deferred tax liability account debit, that is 60, which we had credited earlier, and we will create a deferred tax asset account debit, that is 45, to deferred tax expense 105. Firstly, we will reverse that deferred tax liability, then we will pass another fresh deferred tax asset 45 to deferred tax expenses 105. Now, cash generating unit. What do you mean by cash generating unit? Cash generating unit is a group of asset, group of identifiable asset which can generate cash flow independently. Group of machineries together we can say as a cash generating unit. It is the smallest group of identifiable asset which can generate cash flow independently. So how we will determine the recoverable amount of that cash generating unit? Firstly, we will determine the recoverable amount for the individual asset. In that cash generating unit, firstly we will determine the recoverable amount of all the individual assets which are there in cash generating unit. And if it is not possible to estimate the recoverable amount of the individual asset, an entity should determine the recoverable amount of cash generating unit to which the asset belongs. So, if it is not possible to identify or to find out the recoverable amount of individual asset, then the recoverable amount of cash generating unit is to be determined. Now, what do you mean by cash generating unit? It's the smallest group of asset, that is identifiable group of asset that generate cash flows that are largely independent of cash inflows from the other assets or group of assets. This is to be explained via example. Suppose machinery A. Suppose a product is inserted in machinery A, then it produce some product, then it again inserted in machinery B, then it produce some output, and then again it is inserted in machinery C, and then the final output comes, which is finally sold in the market. These machinery A, B and C which generate final output is a group of machine which is able to generate cash flow, and it is known as a cash generating unit. Now coming to the factors to be considered in identification of cash generating unit. What factors to be considered while identifying the cash generating unit? Firstly, we will identify the ability to generate independent cash flows from the other assets. Suppose there are three assets. In machinery, they are bringing out the output which is inserted in machinery B, and again the whatever the output emerge from machinery B, it will be inserted in machinery C, and then the final output which emerge out from machinery C, it is inserted in machinery D, and then the final output comes out, and that final output is to be sellable in the market. So whether these machineries can do work independently, they can independently generate cash flows. Answer is, if an active market exists for the output produced by the group of assets, if there is a market exists for that output which is produced from the CGU group of assets, then that group of assets should be identified as a cash generating unit. Suppose A, B, C, whatever the output generate is sellable in the market, there is an active market for that, then that output which is generated from machine A, machine B, machine C uh, is a is treated as a cash generating unit, even if some or all the output is used internally. Even some output which we use internally for further production, that doesn't matter. But if there is a market exists for that product, then that unit is said to be a cash generating unit. Now, management decision is also important for continuing and disposing of the assets or operations. If any operations are there, if there is any assets is there, management decision is also very important. Like management decision to monitor the operation, how management will take decision to monitor the operation, location wise, product line wise, business wise, district wise, reasonable area. Like there is a different operations in different areas, like in you can say in Asansol there is a factory, in Bhilwara there is a factory, in Delhi there is a factory, in Chandigarh there is a factory. So in different location they have a factory. So how they will take decision in order to monitor that operation, and also in product line wise, whatever the product they generate, different product wise, how they will take decision to monitor the operation. So in this way, management decision is also important for continuing or disposing of the assets or operations. And then again, cash generating unit should be identified consistently for period whatever. If the company identify the cash generating unit, then it should be consistent from one period to another, because there is no such change. They should follow consistent policy that from one period to another for the same asset or type of asset, unless the change is justified. If any change is required which is a justified change, then only a change is required, otherwise they will follow a consistent policy. Carrying amount of CGU should be determined on the basis consistent with the way the recoverable amount of CGU is determined. Means the carrying amount of CGU should be determined on the basis consistent with the way the recoverable amount of CGU is determined. It will be consistent with the recoverable amount of the CGU. The carrying amount should be determined on the basis of consistent basis with the recoverable amount. So these are the factors to be considered for identifying the CGU. Then we will take one example for that. Like we are taken a mining example. A mining entity owns a private railway to support its mining activities. There is a mining entity who owns a private railway. In order to conduct their mining activity, that railway is only used. That railway is only used for the purpose of loading and unloading of that coal. The whatever they mine, the ores which they mine, that is used for loading that ore and then unloading that. That railway is used for only for that purpose only. There is no such other use of that railway. So the private railway could be sold only for scrap value. There is no such use of that private railway. It doesn't use for any private passenger vehicles. It only used for as a cargo vehicle, like for loading and unloading purpose of that ores, which is generated from the which is executed from the mine. And and it does not generate cash flows that are largely independent of the cash flows from other assets of the mine. Should the entity determine the recoverable amount for the private railway individually or as a whole, means as a unit as a whole, because this railway does not um, what generate the cash flow independently. As a whole they works, and there is no separate use of that railway which generate cash flows. So they work as a whole. So as a whole we can consider it as a cash generating unit, but it individual that vehicle is does not able to generate cash flows. Let's take the solution. It is not possible to estimate the recoverable amount of the private railway, because It is not possible to estimate. How? Because it is not used as a cash generating unit individually, independently. So recoverable amount is not possible to estimate because its value in use cannot be determined. Its value, cash inflows cannot be determined, and it's probably different from scrap value. Therefore, the entity estimates the recoverable amount of the cash generating unit. As a whole, they will estimate the cash generating unit to which the private railway belongs. That is, as a mine as a whole, not as a individual private railway. It is not possible to determine the recoverable amount of individual private railway because it is not able to generate independently cash flows. So it's as a whole, as a mine, they will, that railway is used only for that particular purpose. So the entity estimate the recoverable amount of the whole unit as a whole unit, as a whole cash generating unit, and not the individual private railway, as a whole unit, as a mine as a whole, not as an individual. So this, in this way, we will find whether the individual asset is able to generate cash flow independently or they works as a unit. Now we are going to discuss about the goodwill, how we allocate the goodwill cash generating unit in case of goodwill. Whether internal goodwill is to be allocated or recognized in the books. No, internal goodwill is not recognized. Goodwill acquired in business combination should be allocated from the acquisition date to each of the acquirer CGU that is expected to benefit from the synergies of the combination. Like, this is to be explained by example. Goodwill is a cash generating unit which generate cash, which is an identifiable asset which generate cash. So, in order to synergize the combination in case of business combination, if a company A acquire the goodwill or the business of company B and also acquire the goodwill of the company B along with the assets and liabilities, then that goodwill is recognized, is allocated with the cash generating unit of the company A. How may, if any cash generating unit of the company A is there, like factory 1, factory 2, factory 3, factory 4, and if that goodwill which is acquired by the company A of company B, the goodwill which is acquired of the goodwill of company B acquired by company A enhance the business of company A, then that goodwill, that cash generating unit is to be allocated with the acquirer's cash generating unit. Like, that goodwill is to be allocated with the acquirer's cash generating unit. Goodwill will grow along with the business. They will go hand in hand. So when the business grow, goodwill also grow. So it depend on the business, how the people will give effort in order to grow their business. Then the allow, if the business grow, the goodwill will also grow. And suppose in case of we will take the example, suppose a company A acquire the companies B, who is a pharma company, and acquire, both the companies are pharmaceutical company, and they acquire the formula of company B, who is making the medicines of, or in order to vaccination of the COVID. So they are making the formulas of COVID. So in order, a company A acquired the company B's assets, liabilities, goodwill and all, and also the formula, and that formula is used to increase the business of company A. There are some production factories like 1, 2, 3, 4, 5, 6, 7, lots of production factories in different locations. So that goodwill is to be allocated, and that goodwill That formula is used to enhance the business of company A, the acquirer company, the cash generating unit of that acquirer company. So that goodwill is to be synergized with the combination with that much that is to be allocated with the cash generating unit of the acquirer company, like factory A, factory B, factory C, factory D. How many factories, whatever the number of factories are there, their goodwill is to be allocated. If the assets and liabilities that of the acquirer are assigned to those units or group of units to which the goodwill is to be allocated, such allocated units should represent the lowest level within the entity at which the goodwill is monitored for internal management purpose and not be larger than operating segment as per Ind AS 10A. As we know, we have studied the segment reporting, how the company will report segment. There is operating, different segments are there. So the goodwill, the allocation of the goodwill should be at lowest level, should not be larger than the operating segment. So the internal management should monitor that it will represent the lowest level within the entity at which the goodwill is monitored and not be larger than the operating segment as per Ind AS 10. Now, impairment testing or frequency and timing of goodwill. So frequency and timing is in case of cash generating unit having a goodwill, intangible asset with indefinite lives and intangible asset not available for use. These three assets, in all these three assets, if there is an impairment must be done, impairment testing must be done. If there is an indication, if indication exists, then also impairment testing is to be done. If impairment is not exist, if there is no indication of impairment, then also impairment testing is to be done annually. And if the indication exists, then test for impairment when there is an indication. Suppose it is to be required to be tested annually if there is no indication, and if there is an indication that in 1 year, if there is 4 time indication is there, then it will be tested for 4 times impairment. In case of goodwill, intangible asset with indefinite lives and intangible asset not available for use. In case of cash generating unit does not have, if the cash generating unit is having goodwill, intangible asset or intangible asset with indefinite life or not available for use, then it is to be tested annually if there is an indication, if there is no indication, and if there is indication, whenever the indication exists, then it will be tested. But if in case of cash generative unit, if the asset does not have these three assets like goodwill, they do not have goodwill, they do not have intangible assets with indefinite life, they do not have intangible asset not available for use. Then in that case, what we will do, what the company will do, if there is an indication exists, then test for impairment when there is an indication, and if there is no indication, then no testing is to be required. In case of other assets other than goodwill, intangible asset not available for use, and intangible asset with indefinite lives. If these three assets are there, other than these three assets, if there is no indication, no testing is required, and if there is indication, then when the indication exists, then it is to be tested. Now, impairment testing, other key points. What are the important key points other than this? Cash generating unit, as we say that annual impairment test for cash generating unit to which the goodwill has been allocated may be performed at any time during an annual period. Tests should be performed at the same time every year, and different CGU may be tested for impairment at different times. Like in Q1, if we had tested for goodwill, then in the same period in next year, in the same quarter in next year, we have to test uh, that asset, that CGU. So testing should be performed at the same time every year. The time should be same every year. In first year, whatever the impairment testing is to be done, in the same period, the next year is to be done, and different CGU may be tested for impairment at different times. Now, coming to the corporate asset means any building other than the factory building, like office building, where the administration works. That is known as a corporate asset. And corporate asset are the asset other than goodwill that contribute to the future cash flows of both the CGU under review and other CGU. It means these assets supports these cash generating unit in order to run their business properly. They prepare MIS because corporate assets are office building, and that building does not generate cash flow independently. Rather, it supports the business to generate cash flows. It supposed deliver proper timely MIS to the factory building. They set the sales trend for the sales and marketing department. So these assets indirectly helps in the in generating the cash flows, but they does not generate independently. So corporate assets are assets other than goodwill, like goodwill. If the goodwill business improve, goodwill also improve. Like these assets are indirectly support the business in order to generate cash flows. Distinctive characteristics of corporate assets are that they do not generate cash flow independently. These corporate assets does not generate they does not generate cash flows independently. But if they work as a cash generating unit and allocated to the different cash generating unit, then they generate cash flows. Hence, the recoverable amount of individual corporate asset cannot be determined. If they does not independently generate cash flow, so it's not possible to determine the recoverable amount of individual corporate assets. Therefore, recoverable amount is determined for the CGU, cash generating unit, to which the corporate asset belongs. Like there are 5 or 6 cash generating unit and one corporate asset is there, that corporate asset is allocated to that 6 cash generating unit. So to which it belongs as a whole, then recoverable amount is to be determined. As a whole, the cash generating unit to which the corporate asset belongs and is compared with the carrying amount of this CGU, cash generating unit. Then it will be compared with the carrying amount of CGU. This is to be explained by example, like Earth Infra Limited has 2 cash generating unit A and B. There is no goodwill within the unit. Carrying value, the carrying value of CGU A are 20 million and CGU B is 30 million. The company has an office building which it is using as a office headquarter. So and has not been included in the above value and can be allocated to the unit on the basis of their carrying value. So the office building has a carrying value of 10 millions and the recoverable amount are based on the value in use, that is rupees 18 millions for A unit and 38 millions for B unit. So there are 2 cash generating unit A and B, and there is one corporate asset that is office building having a carrying value of 10 millions, and the carrying value of two units are, that is unit A is 20 millions and unit B is 30 million, and the recoverable amount of 2 units are, that is CGU A is 18 millions and CGU B is 38 million. Now the question is determine whether the carrying value of A and B are impaired. So let start our solution. Firstly, we will allocate the corporate asset in the ratio of CGU, that is 20 millions and 30 millions. In the ratio of A is to B, we have to allocate that corporate asset. So, particular CGUA, CGUB and total. The carrying value of CGUA is, cash generating unit A is 20 millions and the carrying value of cash generating unit B is 30 million, total 50 million. Now the value of carrying value of office building, that is the corporate asset, is 10 million. Now we will allocate on the in the ratio of A is to B, carrying value of A is to B, that is 10 into 20 divided by 50. So we will get 4 million in CGUA and 6 millions in CGUB. Now their allocation, after the allocation of corporate asset, we will determine the carrying value of CGU after including the corporate assets. So 20 plus 4, it will become CGU A का हो गया 24 and CGU B का 30 plus 6, that is 36. In total it will be 60. Now we will compare that carrying value with the recoverable amount. Now recoverable amount of CGU A is 18 millions and CGU B is 38 millions, and the carrying value of CGU A is 24 millions. So as the carrying value is more than the recoverable amount, so there is an impairment loss in CGUA, cash generating unit A, and in cash generating unit B, recoverable amount is more than the carrying amount. So there is no impairment loss. So only impairment loss is in cash generating unit A, that is 6 millions. And then we will allocate the impairment loss into both the in three of the asset, that is cash generating unit and corporate asset, in the ratio of their carrying value. So the impairment loss is 6 millions. We will allocate that loss into CGU in the cash generating unit and corporate asset. So particulars, cash generating unit A and corporate asset, because that loss belongs to these two assets. So we will allocate in that too. That is the impairment loss 6 millions into 20 divided by 24, and the same way we will allocate that is 6 millions into 4 divided by 24, because 20 is the CGU value of and 4 is the corporate asset. We will allocate in these two the loss, impairment loss. So in this way we will allocate 5 is in CGU A and 1 million is in corporate asset. The now revised carrying value after impairment, carrying value CGU A, CGU B and corporate asset. Revised carrying value is, that is before impairment it will be 20 millions, and after impairment there is impairment loss of 5 millions, so it will become 15 millions. There is no impairment in CGUB, so it will be as it is 30 million. And there is an impairment in corporate asset 1 million, so before impairment it will be 10 million, after impairment it will be 9 millions. So in total it will become 54. Now earlier carrying value before impairment. Earlier carrying value before impairment is CGU 20, CGU 30 million and corporate asset. Total is 60 million, and revised carrying value is 54. So total impairment loss is 6 million. That is 60 minus 54, it becomes 6 million. The allocation of impairment loss in cash generating unit. How the allocation is to be done? The impairment loss should be allocated to reduce the carrying amount of the asset of CGU in the following order. Firstly, reduce the carrying amount of any goodwill. If there is in a cash generating unit in the group of asset, if there is a goodwill, firstly the impairment loss is to be set off with the goodwill amount. Goodwill, fully that loss is to be allocated to the goodwill, and if remaining amount left, then it will be allocated to the remaining asset in their ratios of their carrying value. So firstly, reduce the carrying amount of goodwill allocated to the CGU and then to the other asset of CGU pro rata on the basis of the carrying amount of each of the asset in the group. If the recoverable amount is more than the carrying amount of the asset in the CGU, if there is any asset whose recoverable amount is more than the carrying amount in the group of CGU, in the group of asset, then that asset is not to be impaired and remaining asset, the loss is to be allocated to the remaining of the assets. So liability or impairment loss should be recognized on the remaining asset of the cash generating unit. This concept is to be explained with the help of example, that is the recoverable value of cash generating unit is 6 millions and the recoverable value of building is 32 million. There is a group of asset whose that is known as a cash generating unit, that is group of an asset whose recoverable amount is 60 millions, and there is one in that group of asset there is a one building whose recoverable amount is given separately, that is 32 millions. Now the cash generating units are goodwill, building, machinery, software. Carrying value 20 millions, 30 millions, 20 millions, 20 million, total 90 million. Now compute impairment loss on CGU and so how to allocate the impairment loss on multiple assets. Calculate the revised carrying value post impairment. Now solution is CGU is goodwill, building, machinery, software. Carrying value is 20 million, 30 million, 20 and 20, that is 90 million. Allocation of impairment loss. The impairment loss, firstly we will compute how much impairment loss, then so it will be given in note 1 below, that is the carrying value of the whole CGU is 90 million and recoverable value is given in the question, that is 6 million. So impairment loss is 30 million. So firstly we will allocate how much goodwill is to be there, that is 20 million carrying value of goodwill. Firstly we will set off that amount fully with the goodwill. So out of 30 impairment loss, 20 millions is to be set off with the goodwill because the carrying value of goodwill is 20 millions. So up to the extent of goodwill amount, we will set off the impairment loss, and if any remaining impairment loss is left, then we will allocate with the remaining carrying value or remaining asset of the cash generating unit. In the question given, the recoverable value of building is more than the carrying value. So there is no impairment. So in that case, we will not impair building and we will allocate the impairment loss in the remaining asset of the CGU. Like firstly, we will allocate the loss fully to the extent of goodwill, fully to the carrying amount of goodwill, and then if remaining impairment loss is there, we will allocate to that, like in machinery 20 million and software 20 million. We will allocate in the ratio of the carrying value, like 5 millions and 5 million. It becomes total 30 million. So revised carrying value will be, goodwill will be 0 because 20 minus 20 becomes 0, and building 30 because there is no impairment. Machinery becomes 20 minus 5, that is 15 million. Software 20 minus 5, that is 15 million. Revised carrying value becomes 60 million. Now we will explain another example. Like XYZ Limited has a cash generating unit plant A on 1st April 2021 having a carrying value of 1000 crores. XYZ Limited has a cash generating unit. The name of the cash generating unit is a plant A. And the carrying value of that plant as on 1st April 2021 is 1000 crores. Plant A was acquired under business combination and goodwill of rupees 200 crores was allocated to it. It is depreciated on SLM basis, and plant A has a useful life of 10 years with no residual value. So as on 31st March 2022, after 1 year, plant A has a recoverable amount of 600 crores, and calculate the impairment loss on plant A and also prescribe its allocation as per Ind AS 36. So how we will solve this? Solution is, firstly we will find out, we know that the historical cost of goodwill is given in the question because it is acquired in the business combination, that is 200 crores, and plant A is 1000 crores. Total historical cost is 1200 crores, and depreciation for the year is on this slum basis, so no depreciation on goodwill, and identifiable asset it will be 100 crores. So carrying amount as on 31st March 2022, it will be goodwill will be 200 crores and identifiable asset is 900 crores. Now the recoverable amount is 600 crores. So in 1100 is the total amount of CGU, and the recoverable amount of CGU is 600 crores. So recoverable amount is less than the carrying amount, so there is a 500 crores loss is due to impairment loss. So that impairment loss, firstly we will allocate to the extent of goodwill, that is 200 crores, and remaining is to be set off with the identifiable asset, that is plant A. So carrying amount after impairment loss is, that is goodwill will be 0, and identifiable asset is 900 minus 300 crores, it becomes 600 crores. Reversal, in case of reversal of individual asset, if there is a reversal of impairment loss, so how the standard says, how the standard deals with that kind of situation. Reversal of impairment loss shall not exceed the carrying amount that would have been determined had no impairment loss been recognized for the asset in the prior year. Reversal of impairment loss for an asset other than goodwill shall be recognized immediately in the profit and loss. If it is a cost model and if there is a reversal of an impairment loss, then it is to be immediately recognized in the profit and loss, and if there is a goodwill, then goodwill is not to be reversed. And in case of revaluation model, if reversal takes place, then it should be adjusted with the revaluation surplus. It will be adjusted. Any reversal of an impairment loss of a revised asset shall be treated as evaluation increase in accordance with other Ind AS standards, like in case of revaluation model. Further, depreciation will be charged on revised carrying value, and reversal of impairment loss on goodwill is not allowed. Means in reversal of goodwill is not allowed in case of other asset, reversal is possible. In case of cost model, it will be charged immediately to the P&L, and in case of revaluation, it will be adjusted with the revaluation surplus. And depreciation is to be charged on the revised carrying. Cost of asset is 2000 crores. Life of asset is 5 years. Depreciation on asset is 400 crores per annum. Now WDV at the end of second year, 2000 is the cost of the asset and 5 years is the life of the asset. Depreciation is on the asset is 400 crores. So after 2 years, the carrying value of the asset, 400 into 2, that is 800. So 2000 minus 800 becomes 1200 crores. Impairment loss at the end of second year will be 300 crores. Now at the end of fourth year, there was a favorable indicator. And value has gone up to 380 crores. There is a reversal of impairment. Firstly, there is an impairment. Then after 4 years, there is a reversal of impairment because the value of the asset gone up by 380 crores. So how we will make the solution? Carrying value of the asset at the end of second year, that is cost of asset minus accumulated depreciation minus impairment loss if any. So the cost of asset is 2000 crores, accumulated depreciation is 800 crores minus impairment loss is at the end of second year is 300 crores. So it becomes the carrying value at the end of second year will 900 crores. Now we will determine the revised depreciation. So revised depreciation will be revised carrying value after impairment, that is divided by remaining useful life. So after 2 years, 3 years only left. So 900 divided by 3, that is 300 crores. So 900 minus 300 crores, it becomes the 600 crores will become the carrying value at the end of year 3. Now the carrying value at the end of year 4, that is 600 crores minus 300 crores, that is 300 crores. Now at the end of year is a reversal of impairment and the recoverable amount is 380 crores. The carrying value is 300 crores and the recoverable amount is 380 crores. As the recoverable amount is more than the carrying value, so there is no impairment. At the end of year 4, the recoverable amount, the carrying value is 400 crores and the recoverable loss, impairment loss will be 380 crores. Calculate the reversal of impairment loss. At the end of the year 4, there is a reversal because the recoverable amount is more than the carrying amount. Now the reversal will be, it will taken as lower of the recoverable value, carrying value of the asset never being impaired. We will consider for impairment at the end of year 4 there is a reversal of impairment loss. So we will consider that the lower of recoverable value or the carrying value of the asset if it is not impaired at any time during the period. So 2000 minus only the depreciation, that is 400 into 4, that is 1600 crores. That is the carrying value at the end of year 4 will become 400 crores. Now lower of recoverable value minus carrying value, that is 380 crores is the reversal and the carrying amount is already it is allocated, like carrying value is already is the 300 crores, only we will make the accounting entry of 80 crores, that is asset account debit 80 crores to reversal of impairment loss to the extent of 80 crores. Reversal is to the extent of 80 crores. So asset account debit 80 crores to reversal of impairment loss 80 crores. Now this is the example of individual asset. Now in case of reversal takes place in case of CGU, cash generating unit. Then what the company do? What this standard says in case of reversal of impairment loss in case of cash generating unit. Impairment loss recognized for goodwill should not be reversed in subsequent period. Impairment loss recognized for goodwill should not be reversed in the subsequent period. Reversal of an impairment loss for a CGU should be allocated to the asset of the unit except for goodwill pro rata with the carrying amount of those assets. Such increase in carrying amount shall be treated as reversal of impairment losses for an individual asset. Now impairment loss recognized for goodwill should not be reversed in a subsequent period. Means it should not be reversed. Goodwill, in case of goodwill, if there is an impairment loss, it should not, reversal is there, it should not be reversed. And reversal of impairment loss for a CGU should be allocated to the asset of the unit. It will be allocated to the cash generating unit except for goodwill pro rata with the carrying amount of those assets. It should be allocated on the basis of carrying amount on the value of those assets on the pro rata basis except goodwill. and such increase in carrying amount shall be treated as reversal of impairment loss for the individual assets. In allocating a reversal of impairment loss for the CGU, the carrying amount of the asset shall not be increased above the lower of the recoverable amount and carrying amount that would have been determined had no impairment loss been recognized for the asset in the prior period. So in the same way, whatever we had done in individual assets, same way we will do for cash generating unit. This concept is to be explained with the help of example illustration of reversal of impairment loss in case of CGU, cash generating unit. On 1st April 2021, Venus Limited acquired 100% of Saturn Limited for rupees 4 lakh. The fair value of net identified asset of Saturn Limited was rupees 3 lakh 20,000 and goodwill was 80,000. In total, it becomes 4 lakh. Saturn is a coal mining business. Saturn is having a coal mining business and Venus Limited acquired 100% of Saturn Limited at rupees 4 lakhs, out of which the asset value of asset is 3 lakh 20,000 and value of goodwill will be 80,000. And on 31st March 2023, after 2 years, the government has cancelled license given to it in few states. As a result, Saturn Limited's revenue is estimated to get reduced by 30%. The adverse change in the marketplace and regulatory condition is an indicator of impairment. So due to this, it indicates for an impairment. As a result, Venus Limited has to estimate the recoverable amount of goodwill and net asset of the Saturn as on 31st March 2023 when there is an indication for impairment. Now Venus Limited use straight line depreciation. The useful life of the Saturn Limited asset is estimated to be 20 years with no residual value. No independent cash flows can be identified to any individual asset. So entire operation of Saturn Limited is to be treated as a CGU. Due to the regulatory entangles, it is not possible to determine the selling price of the Saturn Limited as a CGU. So its value in use is estimated by management at rupees 2,12,000. As suppose by 31st March 2025, the government reinstates the license of Saturn, which they had cancelled in 31st March 2023. The management expects a favorable change in the net cash flow. This is an indicator that the impairment loss may have reversed. The recoverable amount of Saturn Limited net asset is estimated. The value in use is expected to be rupees 3,04,000 and the fair value less cost to sell is expected to be 2,90,000. Now calculate the impairment loss, if any, and also show the accounting treatment for the reversals of impairment loss and the subsequent depreciation thereof. Now, this is the illustration and solution is, since the fair value less cost to sell is not determinable, the recoverable amount of CGU is its value in use. If fair value less cost to sell is not able to find out, then value in use is taken into consideration as a recoverable amount. Now the carrying amount of the asset of the CGU as on 31st March 2023 is as follows. Goodwill 80,000, other asset 3,20,000 when it was acquired, and the total value of the asset is 4 lakhs. Accumulated depreciation, there is no depreciation on goodwill. There is a depreciation on other asset, that is 32,000, and the carrying amount will be goodwill 80,000 and other asset will come 288,000 and the total will be 3,68,000. Now impairment loss will be, now how much will be the impairment loss? Firstly, we will find out the impairment loss. Impairment loss is carrying amount minus recoverable amount. As we know, the carrying amount is 3,68,000 and the recoverable amount is given in the question, that is It is estimated by the management that is 2,12,000 as on 31st March 2023. So the impairment loss will be the difference between the 3,68,000 minus 2,12,000, that becomes 1,56,000, and this impairment loss is allocated in the carrying value on the pro rata basis. On firstly, it will adjust with the amount of goodwill, and if any remaining left with the other assets. So there is a carrying amount of 80,000 in goodwill. So fully goodwill is allocated. Fully that loss is to be allocated with the carrying amount of goodwill. That is 80,000 is to be set off with the carrying amount of, and remaining is 1,56,000 minus 80,000. It becomes 76,000. It will be adjusted with the other asset, allocated with the other. So 1,56,000 is the impairment loss, which is in now the 1,56,000 is to be charged in the statement of profit and loss for the period ending on 31st March 2023 as an impairment loss. Now this impairment loss is allocated first to the goodwill, and remaining loss is to be adjusted with the other asset. Now we will calculate the carrying amount of identifiable asset as if there is no impairment loss. In case of reversal, we will firstly find out that the carrying amount of the asset as if there is no impairment loss. So on 2025, there is an indication that the favorable indication, and the impairment loss has to be reversed. The historical cost of the asset is 3,20,000. Accumulated depreciation is 64,000. So the carrying amount had no impairment loss is recognized. It becomes 2,56,000, because the historical cost will be 3,20,000 of the asset, and the accumulated depreciation at the rate 20%, that becomes 64,000. For 2 years the depreciation will be 64,000, and the carrying amount has no impairment loss is to be recognized. If the impairment loss is to not be to be recognized, then it becomes 2,56,000. Carrying amount of other assets after recognition of impairment loss, that is carrying amount as on 31st March 2023, it becomes 2,12,000. Accumulated depreciation for 2 years becomes 2 divided by 18 will be 24,000, and the carrying amount is 1,88,000. This is the carrying amount, and this is the carrying amount as if no impairment loss is recognized. Now the impairment loss recognized previously can be reversed only to the extent of lower of re-estimated recoverable amount. That is the 2,56,000 higher of the fair value less cost to disposal, that is 2,90,000, and value in use, that is the recoverable amount, and impairment loss reversal will be 2,56,000 minus 188, because already charged it becomes. So the amount is recognized in the income statement for the year ended. The carrying amount of other asset as on 31st March after reversal of impairment will be 2,56,000. From 1st April 2010, the depreciation charge will be 2,56,000 divided by 16, it becomes 16,000. Now comes, there is a disclosure. The disclosure requirement is also important, so we just go through the disclosure requirements as per this standard. An entity should disclose the following for each material impairment loss. The impairment loss must be material and recognized or reversed. If recognized also, and in case of reversal also. Event and circumstances that led to the recognition or reversals of the impairment loss. Amount of impairment loss recognized, how much amount of impairment loss is recognized, or how much it should be reversed. The amount is to be properly disclosed. And at what circumstances, what was the event for recognition and reversal is also to be disclosed. Whether the recoverable amount of asset or CGU is its fair value less cost to sell or value in use. Whether the calculation recoverable amount is calculated as fair value less cost to sell or value in. If the recoverable amount is fair value less cost to sell, then the basis used to determine the fair value less cost to sell is to be disclosed. If the recoverable amount is value in use, then discount rate is to be disclosed. So these are the disclosure requirements. There are certain differences, as some important differences as per Ind AS and Accounting Standard 28. Ind AS 36 and Accounting Standard 28. What are the key differences between the Ind AS and old standard as per generally accepted accounting principles? That is financial asset scope. AS 28 does not apply to these financial assets. Ind AS 36 applies to financial assets classified as subsidiaries, associates, joint ventures. Biological asset scope. AS 28 does not specifically excludes biological assets. Ind AS 36 specifically exclude biological assets related to agricultural activity. Ind AS 36 specifically exclude biological assets, but AS 28 does not exclude biological assets. Annual impairment test for intangible and goodwill. Goodwill and other intangibles are tested for impairment only when there is an indication that they may impair. Goodwill intangible assets not yet available for use is to be tested even if there is a no indication. Even if there is no indication, then also in case of Ind AS 36, it is to be tested annually. If there is no indication of impairment also, it is to be tested in case in Ind AS 36, but a accounting standard AS 28 does not says that if there is no indication, then you have to test in case of goodwill and other intangibles. But in case of in Ind AS 36, it is specifically said that in case of goodwill, intangible asset not available for use or intangible asset having indefinite life, if there is no indication of impairment, then also they will be tested every year if there is even if there is no indication for impairment. Now I had covered this topic fully, and if you like, please subscribe my channel, please share my channel. Thanking you for watching my video.